Hello, everyone. I know that there has been a lot of uncertainty with the real estate market as interest rates are going up or have been going up. There's inflation, the stock market has been going down, and just so much uncertainty in the world today. And so I wanted to share with you some insights of what's happening and what has happened here in the Rochester real estate market, so that you can have the best framework to make the best decision on whether you should buy now or rent. And so let's get started. So the first thing that I want to show you is, obviously, I love my statistics, and one thing that kind of caught my attention this month was the month supply. So month supply basically tells you how long it would take if no new homes come into the market before there aren't any homes available for sale. So this metric has been pretty low in the last couple years. So right now, last month it was at zero point 0.9, so less than 1 month. So if we have no new listings in 1 month, in theory, we shouldn't have any homes for sale. So this has been very low. So I looked 10 years back, and if we go 10 years back to, let's say, March 2012, we were at 6.3 months. A balanced real estate market where it's not a seller's market or buyer's market is at 6 months supply, right? That's kind of where you would say that it's balanced. So since 2012, it's the month supply has been going down. So we've been in a seller's market, and look how far away we are from it being from the real estate market here in Rochester being balanced. And then anything about 6 months, that means that would be a buyer's market, which, if you're a buyer, right, that's kind of where you're hoping and praying that it goes. But unfortunately, I don't think that's going to happen, anytime soon, because that means that for the month supplies to go up that much, we just needs to have tons of new homes come into the market, whether it's new construction or existing homes, and there's just no evidence that that's going to happen. Or the other thing that would need to happen is that buyers or people just stop buying houses. And one of the things that I like about Rochester and the Rochester market is that, because of Mayo Clinic, and the people that live here, there's always people moving in that have to move here to work at Mayo, and then there's always people that have to leave because they're going to work at other companies, or they can't stand the cold anymore, whatever it is, right? They have to move out. And so there's always turnover, or it's always buying and selling real estate. So to me, that's good. The other thing that I wanted to say is, Rochester, the growth in home prices in the last 12 months was 15%, 15%, which seems high, and it is a high number. But there's been other cities and places where the growth has been, 20, 30%, right? So I feel like Rochester is kind of in the middle, because the places where you've seen a lot more growth, that's most likely not as sustainable as what we've seen here in Rochester. So that's just another um, information point that I like to tell people, that it's like Rochester, even though things are, homes are gaining, appreciation and all that, right? It's still pretty conservative to other cities. So that's the month supply. So let's look at new listings, because that new listings affects, the supply. So we'll look at the, 1 year ago, and last month in May we had 223 homes, which is 3.5% lower or less homes than May of last year. So the supply of home is cyclical, right? So in the winter, you start seeing less homes. So in the next, 6 months, obviously this number of homes coming to the market is going to go down, and it's possible that it goes down even more, because as interest rates continue to go up, or even if they stay where they're at, which right now it's around like 5%, right? There's going to be people that have a home to sell, and they're thinking, well, if I'm at like 3% on my current mortgage and I'm going to buy another house at 5%, it's going to make it a little tougher for people to make those decisions, even if they can afford it. Maybe it's more of a mental thing. But obviously, there's going to be people that have to sell. Maybe they have to move up to a bigger home, and they're just going to have to buy a home with a little bit higher interest rate. So, obviously, we'll see what happens with the supply of homes. But my guess is, it's that it's going to remain, low or lower, right? So again, if the demand, so okay, so now let's look at demand actually. So let's look at demand. So demand, you can see it by the days on the market. So last month in May was 4 days, right? Which, I mean, that's really fast. Homes are selling really fast. And even if we look at the highest number of days, which was, December 2021, that's 15 days. I mean, that's like 2 weeks. That's still, things were selling still pretty fast. So if demand goes down, that means that the days on the market is going to go up. So it's going to take longer. So if we go to like February or January 2021, we were at 21 days, which, it's higher than it is now, but that's still not bad, right? 21 days, 3 weeks, homes are still selling pretty quickly. So even if demand goes down and we start seeing that homes, it takes a little longer to sell homes, I'm okay with that. um, the other thing to think about is, as the demand for homes starts to decrease, that means that, you can now, you're gonna have probably like, less competition, so there's gonna be less multiple offers. You can get a home inspection on your offer. Maybe you could even maybe get some closing costs depending on the competition, right? So there's some good things if the market or if the demand starts to soften a little bit, for as a buyer. So ironically, even though interest rates are going up and there's all this uncertainty, as a buyer, it might be kind of good for you to, start looking to buy a house now. Obviously, you have to consider the principles. You have to make sure that you can afford the payment. You have some savings, because when you become a homeowner, things can break. Water heater goes out, so you have to get a new one. So make sure you have, some savings, and make sure that, if you're gonna buy a house now, that it's a house that you're gonna be in for, at least 3 years, preferably closer to 5, or have a plan B. Like maybe you buy a house now and things change after 3 years, and then you can take the house and make it a rental property, and, make some cash flow, and turn it into a rental, basically, right? So have some options as well, because things change sometimes. And right now, there's definitely uncertainty in the real estate market, stock market, and I guess the world overall, right? So this was some of the metrics that I wanted to share with you. If you're a seller, so we've been talking about buyers. If you're a seller and you're thinking about selling maybe in the next 6 months or a year, and you're trying to think, well, maybe you should, sell now, whatever. Um, what I can tell you is, as if demand starts to go down for homes, I mean, you're not gonna have issues selling. Maybe instead of selling in 4 days, it takes a couple weeks. So just make sure that, you keep your house in good shape. If you're thinking about selling the next 6 months or a year, now would be a good time to start kind of prepping things, so that when you go to sell, your home is ready, and then you can maximize the sale price. So, sellers, you're gonna be in good positions. I think no matter what happens, obviously, there's gonna be different, like certain price points will could be affected a little bit more than others. If demand starts to go down. But again, if you have any questions about the real estate market, if you want to sit down and talk in more detail about what's going on, or kind of stay up to date with the market and the statistics. And I think the month of June will say a lot about, what's going on, or what's gonna happen with home prices. Because, like, if you look here at March of 2022, the median sale price was 330. In April, it went up a little bit, and then in May, kind of, I mean, went down, not that much, but it still kind of didn't continue to go up. And typically, the month of May, the median sale price of the month of May is usually, higher than in April, and then June is a little bit higher, and then it starts tapering off and kind of going down. That's kind of like, if we look here, April 2021, it was 270. Then we went up May 2021 to 300, and then June 307, and it starts kind of going down a little bit, because seasonality, and starts getting cold, and that's just kind of the cycle of the market. So if in June we see an increase, then that's kind of like more positive, like, hey, prices are still continuing to go up, appreciating. But if we see that June kind of goes down, then, you know that could be a sign that, we're kind of in a stability or stable, like, price point, where, prices are just going to kind of stay in that range. Like I said, in the last 12 months, homes appreciated 15%. It's possible that maybe in the next 6 months or 12 months or like a year, home prices won't appreciate that much. Maybe they'll stay somewhere around like the 4 or 5%, maybe 8%, which is what we're seeing for inflation now, which is not a bad thing. It's just not gonna go up as high as it's been in the past. So again, if you have any questions, feel free to reach out, and I'll have a link on my website where I have all the statistics, all these graphs that you can check out at your own time. And yeah, hope this added some value and help you decide whether you should buy or rent. Thank you.